pairs in 2014. So as always, guys, these open forums. Again, we've got some regulars. I can see Chris, I can see Jamie and John. Anything you want to ask about any currency pairs, again, please let me know. Let me know what your key levels are. Let's try and see if we can find some value in the markets. I'm going to go through all currencies in general. Got a few that I'm focused on right now. I'm going to start focusing on the dollar. It doesn't matter how you look at it, really. The dollar still sets the tone for the way the FX markets work. And we can't get around it. Everything's priced in dollars, all the commodities. The US is still the biggest consuming nation on earth. And all this talk about China being the biggest economy, yeah, it might well be, but it won't be the biggest power. Simple as that. It will not happen in my lifetime. Not saying it won't happen in future generations, but while I still live and breathe, China will not be setting the tone for the world global economy. It will still be the US and the Western nations. So right now we've got to focus on where dollar strength is, where dollar weakness is. Try and filter that through to what's happening conversely in the euro. Euro is still probably the it depends who you listen to, but it's still the second biggest currency. And again, it's not just talking about who uses the currency. It's who holds. And when I talk about who, I talk about countries. Individuals is irrelevant. We're talking about central banks. We're talking about countries. Where do they hold their reserves of currency? And it's really a real toss up between the dollar and the euro right now. And saying that, the yen is going to play some part in this. Yen, Japan holds the biggest reserves of dollars, so the dollar yen is something to look at. The dollar yen, little cheeky chart at the bottom. This for me, 103.969 is a good level to look at. I reckon if we break through that, we might see a big spike down to here. But personally, I don't know. Maybe a little. See how we test this level first. If we break through this, with the long kind of tail, and then kind of find some support on 103.969, maybe it's a buying opportunity. Again, Fibonacci in play. I'll go for that in a minute. All the good stuff. I have to read the boring stuff first, unfortunately. Risk warning. Spread betting, safety trading, carry high risk of capital, and funds and losses will exceed significant deposit. It may be suitable for everyone, so please ensure you fully understand the risks involved. The information comments provided herein are no circumstance to consider an offer to invest. Nothing herein should be issued investment advice. The information provided is completely accurate the date the information is produced. Education only. Content of webinars, personal opinion of moderator at 9trade.com. Content is not constitute financial investment and tax advice. Intrade.com is not liability for the content during the session. So we're going to cover live chatting analysis, multiple time frame analysis. We're going to go through a few different products from the monthly down to the hourlies. Then you'll see where I'm coming from. That's why you have to do in the multiple time frame, all time frame trading. The only way you can trade. Fundamental analysis, well, there's bags of that. Live real money trades, got my account open. Anything good, I'll be doing it. Questions and answers, as I said, guys. We've got my regulars, got some new people in the room. Anybody who wants to talk about a specific currency pair, ask me, or just type in the chat window. We'll go through it. I'm here for you guys. Okay. So, the fundamental side of things, where do we stand? Non-farm payrolls, expected 220,000, came at 74. Is that going to be revised up? Yes, it is. Okay, so how does the situation stand right now? The markets did not sell off at all on the back of that poor non-farm payrolls. They actually rallied significantly and sustained them rallies. So what's going to happen now? What's the Fed going to do? What can the Fed do realistically? Okay, they're looking for that good data to support their decisions to taper quantitative easing. Remember, we've already tapered by 10 billion. That's like cutting your yearly expenditure by £1,000. It is literally nothing. It's the least they could have done. So where do we go from here? Well, it's interesting. I mean, you've seen a massive spike again, as I wrote in the Financial Times and wherever else I write for, predicted that there's a spike in the pound. And there's a spike in the pound because, unfortunately, Mr. Carney, who's been less than impressive, shall we say, has linked his interest rate decisions based upon unemployment. Well, when unemployment's at record highs and you expect it to drop by 1.5%, and it does that, how can you be surprised? How can you be surprised that these things have happened? One thing we can say in the UK, and one thing we can say about British people is we've been around a long time. As a society, as a functioning country, we're not new to this kind of stuff. We've had good times, we've had bad times, we've had worse times than this. So were we going to get out of this credit bubble? Yes, we were. Okay? So there's a load of kids unemployed. So what? Who cares? Kids are just kids. Kids will find jobs eventually. We're not interested in kids. Kids don't bring money. The money's in the people that are around right now. The elderly people. Okay? The 70 to 90-year-olds that are living out, outside their allotted time and have accrued more than their allotted share. They're the people we're worried about. Because when they pay it, then we're going to get all their money. Okay? It's people like me, probably my kids, that are going to inherit, the kind of fortunes that exist in the Ruffley realm. And so what? What are you going to do with it? You're going to sit back? You're going to be sensible? Nah! You're going to blow it. That's what's going to happen. So in 20, 30 years' time, we're going to see a massive boom. Like the 70s again. The 60s, the summer of love. It wasn't around at the time, but I bet it was great. That's what's going to happen. Because all this money that's stored up and accrued, and you see people with these houses, they don't know how the house became so valuable. They don't know. They don't know anything else apart from their house is worth money. And what's going to happen if it falls into the hands of the younger generations and the kids? They're going to realise their assets and they're going to spend them. It's as simple as that. So right now, we're kind of consolidating. There's been bad times, but the world ended. Okay, we've all had to cut our belts. We can't have 5 holidays and eat at Bohemia every night. But what we can do is crack on. And that's what we're seeing in the UK. The markets really have come back to parity. The FTSE, and the DAX at the highest level they've ever been. Well, the FTSE's not quite, but the DAX certainly has made new highs. So the tone in Europe is good. The tone in America is fairly good. So really, it's just kind of back to normal, isn't it? We just crack on. So what does that mean to the currencies? So the currencies, focus on the dollar. You can see the dollar has been hit quite heavily. And that's a filter through, again, from the non-farm payrolls and the fact that, the Fed might, have to stop tapering. And stop tapering is really weird. It's good in some respects, because when they say they're going to stop tapering, that brings money back into the markets in the dollar. And when they say they're going to stop tapering, that's bad, because, that brings the dollar down. However, it's actually good. All these things are, real oxymorons. They really are kind of, smoke screens. If the US say that, the country's back on track, we don't have to, keep pumping $85, billion into the economy every month, and that's good news. Okay? But the markets, and the futures markets especially, see it as bad news. So when the quantitative easing is cut, markets go down. But when quantitative easing is only cut by a tiny amount, markets go down and markets go up, because it's still $75 billion a month of free money. The Fed, they're going to be serious about this, have to come out, and I said this in my Epic Street report, they're going to have to come out and say, right, yeah, we're on it. The US is back on track, we're self-supported, we're going to cut quantitative easing by $40 billion. Okay, we're going to halve it. 50%, bang, off. Then that will send a shockwave through the market, probably send the markets down for a couple of months, and then they recover. But that's the only reason why we're going to get true market conditions. While we're still trading now, it's still false. And it's really difficult to trade the markets right now, because no fundamental data has any real impact. It's like opposite land. Bad is good, good is bad. So you see the dollar versus the Swiss. Swiss is seen to be, a safe haven. Well, the dollar's, certainly getting sold off. We've seen a big breakthrough. 0.9, 0.877. That's a good, strong level. And then it's continuing to sell down. I'm a simple man. I try and stick to things that make sense to me. And all my charts, all the things I understand revolve around what's happened in the past, what can happen in the future. Fibonacci. Okay? So this is my Fibonacci sequence in play. I've drawn the chart for you. When we try and make new highs, there's a certain level of where we can go to, okay, which will be these two levels up here. Then the market stops, and it aims for the 50%. When it closes below the 50%, okay, it looks to test the lower, okay, 161, 261, and 423 extension points of, retracement points of Fibonacci. So, is anybody out there, can anybody tell me if that works? Yes. Yes, it does. Now, again, these aren't my rules. This is the laws of nature, the laws of Fibonacci. Leonardo Pisa, smarter guys than me invented these things, but it's using it in the right kind of way. Okay, it's understanding when the market may have peaked, and when it has peaked, what it's going to do. These are hourly charts. You'd have to wait quite a long time for the market to bottom out down here, and maybe it's not finished. Okay, maybe it's got further to go. Maybe it gets down to 89,666. But understanding how markets move is the key to understanding trading. Okay, it's all cyclical. Things go up, things go down. The harder and faster it goes up, the quicker and faster it goes down. I mean, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 20 candles to go up from here to here. Yeah? 1, 2, 3, 4, 5 candles to go down. So the quicker it goes up, the quicker things go down. And it doesn't... Again, I mean, that's just from my experience, the way I view the markets. Maybe I'm a natural pessimist, but I like selling into fear. People are greedy. Okay, so when things are high, people have bought into it. On the euphoric. Yeah, the dollar is going to appreciate against the Swiss. We're going to make loads of money. Oh, it's going down. Sell it. Then the overextensions come in. So for me, it always works on the upside to the downside better, and that's why I like the Fibonacci retracement kind of scenarios, because the quicker it goes up, the quicker people cash in. Okay, so realistically, let's look on the higher time frames and just see exactly what's happened in the Swiss. I mean, so really, we're on quite a steady and sustained bear run. From since 2001, so we're talking 14 years, the market's been heavily sold off from these highs up here. Back in 2001, we're up at 1.8, and now we're currently trading less than 0.92. So a big drop. I mean, what you have to try and do is understand that what the world was like back here when the market was up is a different world. I mean, that's 2000. We're almost talking pre 9/11 stuff, and that's when the world was brilliant. Yeah, everyone's going to be a millionaire, and the world was great. And then obviously, bad things happen in the world. Then we get to like 2005, 2006. The reality is that the world is not quite as great as we think. All these politicians are really just guys. They don't really know what's going on. So again, the kind of dollar really kind of starts to kind of depreciate against the Swiss, because the Swiss is a safe haven. So that, it's a protected little bubble of a world that rich people want to put the money in. So that's why you see the dollar going down as times are perceived to be better. So I guess it's a bit of a contradicting chart for me in some reasons, because I think the world's more unpredictable than it ever has been. So I would expect really the kind of dollar Swiss to be more up here. I mean, I don't know. It's a really tough call, to be honest. It's a tough kind of toss up, because it's that perceived value. I mean, again, it's if you have so much money that you have to worry about holding vast reserves of different currencies, then really what are your issues? The average man on the street doesn't have the worries about is my money safe in the bank? The UK have taken care of that. So the whole currency things are always a really difficult thing for me to kind of get my head around. I generally stick to the gold indices, the DAX, the S&P. I can understand that mentality. The currency side of it, I always find a little bit contrarian and contradictory. So it's very difficult. But the fact of the matter is, I mean, if you want to draw some studies on this, I mean, it's fairly pointless going back to these kind of times. But I would say the significant highs are here, significant lows are here. So market has come down, really rejected on the monthly charts these lows. Hit the 50%, 50% became resistance, market's going down. So in the next 12 months, we make a new low. So the dollar versus the Swiss breaks 0.7. That's it. That's it. If you want to do anything else, then do that. Okay, we've closed below the 50% in the monthlies. Try to break it above it. Yeah, upper Bollinger Band rejected. Upper Bollinger Band rejected. Treating the moving average and the monthly as resistance towards the lower end of the Bollinger Bands. So essentially, once we close below the 38.2, okay, on the monthlies, the market's going to drop. So Steve Ruffley's prediction is we drop 2,000 ticks in the next 12 months in the dollar versus the Swiss. Simple as that. Go to the weekly charts. Again, looking quite bearish. Areas up here, where the market simply refused to push any higher. And again, we're finding the moving average to be, resistance. We closed above it here, but the market's instantly, the next weekly candle, retraced nearly all these gains. So it's looking like the market wants to get down to these lower levels at 0.87981. It breaks below that. You've got clear targets. This is a big target. Okay, these lows are a big, big target. Dailies, again, lower high, lower high, lower high, lower high. Again, markets really tried and then broke above. So one of these little kind of cheeky fake out scenarios. I mean, look at these daily candles. Tried to break above, rejected. Tried to break above, rejected. One final push. Couldn't get anywhere near the upper Bollinger Bands of the previous highs. Red selling day. So the momentum really is carrying on. So look at that on the hourly chart. And you've got an idea. I mean, obviously you've seen a big sell-off over the last few hours. But what's going to happen? What I would say is, again, use your Fibonacci in a more meaningful time frame. And we starts here. So we're going to get back to maybe the 50%. Okay, so the market maybe might get to 50%. It depends how strong the down move is. Maybe it goes up another 34, 35 ticks. When it doesn't, it has to make a new low. And where's the next point of resistance? It's down here, as I said. So you've got basically your 50%. If you go short any time now, you've got a 30-tick stop to a 220-tick reward. So that's good. I mean, that's like 8 to 1. I mean, that's as good as risk reward as you're going to look for. But I guess it depends on your view on what the dollar's going to do against the Swiss. So that's that chart. Okay, that's that taken care of. Other things you might want to look at. Let's put that back to that. Other things you might want to look at. Got the dollar Canadian. I just find that a completely pointless thing to trade. I'm sure people out there. I know that a lot of people trade different currency and exotic pairs, so I'm not going to start saying, that these aren't worthwhile trading. But to me, the correlation between the US and Canada suits when it suits, and it doesn't suit when it doesn't suit. I can't really find any solid, logical, fundamental or technical reasons why I would trade that pair. So I stay away from it. Okay, and that's, again, just going back to the rules of how I trade, how I've survived in the markets. I only trade what I understand. So I generally don't trade things like Asian stocks, and the Asian markets, because I don't really understand them. I understand the US, I understand the UK markets, and Europe. That's a lot of money to kind of go at. Got a few questions. Sorry, I've kind of been a bit lax here. So Manjo's just saying, Steve, don't you think all the money that's been absorbed by the massive healthcare costs of the baby boomers in the UK? There's more money in the world than there's ever been, Manjo. So if we think in the UK there's going to be, free healthcare for everybody forever, we're all kidding ourselves. It's like we all think that people under the age of 30 are going to get a pension when they retire. It's all nonsense. Unfortunately, the generations of, the 50s, 60s, 70s and 80s are going to take all the money, use and spend all the money, because unfortunately, all these aging people that have gathered all this cash are the ones we're going to have to look after in the future. So all these people that, the natural life expectancy was kind of, 75, 80. These people live well into the hundreds because of modern medicine. So unfortunately, we've got an aging population that we're going to have to look after for 10, 15, 20 years more than we thought. And that means paying these people inflated pensions. Public sector workers will be the undoing of the UK. And again, don't forget, people of a certain age and certain generation, you voted for this, you made this. So I can't say that I had any hand in this because I'm too young, unfortunately. So as soon as I decided I didn't like England, I didn't live in it. So I've lived in tax havens the last 10 years. But I'm rich, so that doesn't really make any difference to me. I can pick and choose what I do. But unfortunately, the thing is that the benefit culture and the benefit society was born out of ideas of a lost generation of people that decided they didn't want to interact with these kind of people. So we'll just, as long as we're all fine and making the money, we'll pay them money to stay away from us. Well, unfortunately, everyone has jumped on that. And their benefit system is wildly out of control. And that's your fault. I'm not saying your fault as people listening. I'm saying your fault as people as a previous generation. So unfortunately, it's left to David Cameron, who he's doing a good job. He's doing a good job, actually. I don't like the guy as a person, but I have to respect that he's kind of kept a hard and fast line, and he's doing the difficult things that needed to be done. He's cutting the benefit culture, and he's stopping it being a way out for people, that you don't ever have to work. You know, you have to put something back into society in order to get your money. So, yeah, interesting. What's that going to mean to the currencies? Well, I don't know. I mean, I think the UK is still a very, very prosperous place and a good place to live. So, as I said in any reports I've written over the last 6 months, buy the pound. The pound's going nowhere, guys. The pound's only going to appreciate. And it's certainly going to appreciate against the euro. Seen these spikes in the euro, but that's all down to central banks. It's not down to, it's not down to, real supply and demand. The euro is the biggest lie ever made. Okay? It's as simple as that. It's all propped up by Germany, who is skint, and I lived in Spain, for a long time, and I've seen it firsthand. Spain's a very confused, a very kind of boom and bust country. So everyone's talking up the euro is fine, the European Union is fine, central banks are buying back Spanish bonds. Yeah, for now. And then, then what? Is Greece fixed? Greece has got more debt than when the crisis started. So how's that going to be sorted? I mean, I don't know. I don't have a spur, 25 trillion quid to give Greece, so who else does? So, anything else? Right, some more questions. Ian, okay, if the kids inherit wealth in houses, they never manage to buy a house, then maybe just live in an inherited house rather than spending it or using inherited wealth to pay off debt. Well, it's all cycles, Ian. I mean, I didn't invent the world, unfortunately, so I can only tell you my observations, that things will go up, things will go down. The trouble is, if you've had hardships, you don't know of the good times. You don't know how good you've got it. Human beings are all fairly selfish in some respects. And we're very easy to pick and choose. I can say my childhood, wow, it was a difficult childhood. It wasn't. It was a brilliant childhood. When I went to get a job, I got graduate jobs when I didn't even have a degree. So I can't say anything against the world. Is it tough for kids now? Yeah, maybe. But it's only tough for kids because they've got higher expectations. I used to go out and play football all night. That cost nothing. Now kids have to have, iPods, iPads, Xboxes. They have to be able to have designer clothes. Where did that come from? Where did that come from? So the level of expectation is massively increased with kids. So that's why they're not happy. Because, the parents and they can't support what they think they should be. They think it should be Justin Bieber. Well, Justin Bieber's just been arrested for driving under the influence and drag racing. He's a 23-year-old brat, a little kid. Want people look up to that? Nonsense. That's why the world's skewed. That's why the world's in trouble. Managers are saying, can you explain why the Swiss and Japanese yen are such safe havens? Well, I don't say the yen has been a safe haven, but the yen has a big reserve of dollars, the biggest in the world. So that's why the dollar yen is something to focus on. The Swiss franc is a safe haven because it's a little bubble of a place. It's like, Switzerland is renowned for being, a tax haven, offshore tax center. I have to be careful how you kind of phrase these things these days. But it seemed to be that if the world's going, a little bit squiffy, then places like, Switzerland and the Swiss franc are a safe place to put your money. Like gold is a safe haven. It's all perceived risk. It's small. It's managed. It's a lot of wealthy people in a small place, that's kind of neutral in the world. So it's not like putting your money in Iraq. Iraq's not neutral. It's, very kind of all over the place. So it's all perceived safety. And, what is real, what is safety? What is it? I don't know, to be honest. I don't know really, where the real kind of perceived safety is. So, again, these are my rules. I'm only telling you, what I've learned over the last kind of 10, 15 years of kind of being around and being in the markets. And these things, if a bomb goes off tomorrow, in London, then the Swiss franc will get bought because it's a safe haven. Gold will go up, stocks will go down. This is just the way the markets work. Okay. Forest Gal, good to see you. The CAD's been sad lately. Oh, poor CAD. Again, as I said earlier on in the presentation, I kind of stay away from the CAD, to be honest. It's too close a correlation, and I just don't like that. I like polar opposites. I like things that are likely to crash and to contradict. Okay, right. So Manesh is asking the pound versus the dollar. Okay, that's a good one. I like that. Let's bring that one up. Pound versus the dollar. Okay, these are MetaTrader charts. These look interesting, don't they? Not very. Okay, let's put some Ruffley magic. So, pound versus the dollar. Well, cable's an interesting one. To be honest as well, this is another one I generally stay clear of. Because no matter how I look at it, I'm from the UK, so you're naturally biased towards the UK. It's very hard to take that bias out of your opinion. So I think the UK is going to recover and recover strong, and I think they're going to be the first to move on interest rates. So I can't see anything but the pound, looking to close this gap here and get back up. The pound's going to be, significantly stronger in the next, couple of quarters. Mark Carney's already tipped his hat. We already know what he's going to do. Okay, so there's no confusion. The market started to rally already because we know he's linked it to unemployment. So he can't just come out and go, oh yeah, sorry, I made a mistake. I'm not going to talk about rates until new scenario. He said it's linked to unemployment, so he's going to have to answer on that. Unemployment's falling. It's getting towards the 7%. That means interest rates are going to have to go up. Interest rates are going to have to go up anyway. We're all sick and tired of petrol prices, food prices going up. That's inflation. Inflation is controlled by interest rates. Okay, so all this stuff where as king is his castle. We're all got £10,000 credit cards and mortgages we can't afford. Interest rates go up. You lose that. Sorry. Nobody asked you to borrow this money. Nobody said you should live, in a £350,000 house when you're 25 years old. Nobody said that was the norm. Okay, so if you borrowed the money against that and you can't afford to pay it back, it's tough. They'll get to a point where society, people in the UK, will just stop tolerating petrol prices, fuel prices, food prices being so high. Then they'll have to act, and then all the casualties will be the people that overextended. Okay, that's people in my family. People I know. My sister, for instance, 30 years old, bought a house in London. Okay, can she afford it? Well, bank said she could. Took a big chunk of, borrowed, family, money from myself and my dad. But, is that going to be, what's going to happen when interest rates go up to 5%? Am I going to have to give her another £300-500 a month just to, cover the interest payments? I don't know. Unlikely. But, these are the things, these things we'll have to live with. We're all living for the moment, but we don't see the bigger picture. The trouble is, with older generations, the bigger picture took a longer time to come. It's like music. Songs used to stay on top of the charts, back in the day, for weeks, months at a time. Now, it comes, it's forgotten. The access to life, the access to information, it is right here, right now. It comes, it goes. And that's the way we're living. We're living for the moment. So the quicker we live, the quicker these things are going to go down. So, for me, Mark Carney's already tipped his hat. We're reaching these double peaks here. So for me, we've got on the upside, I don't know, 3,000 ticks. The pound's going to severely appreciate. Look at all these points of support. Look at these, pin bars here, really rejecting the lows, held above the moving average, due for a breakout to the top side. Massive level of monthly resistance at 1.67393. So once we break that, buy some pounds. It's going up. Simple as that. And again, cycle through, to your weeklies. Very, very bullish. Dailies. Quite nice, smooth curve going up. We're outside the daily Bollinger Bands now. So we've got minimal 135 ticks in the pound. Of free money. It has to test these levels where it comes down. That's how charts work. That's how Bollinger Bands work. Okay, so looking at hourlies, try and find some low areas to support the moving average, all these levels down here, and then the market goes up. It's just as simple as that. Yep, US unemployment coming out. I don't really think the US unemployment's going to do a great deal, to be honest. After the shock of the non-farms, everyone's expecting, a good high revision, so I don't really think anything's going to happen on that stakes personally. But yes, thanks for pointing that out. In fairness to Mark Carney, he said it would consider raising rates if unemployment falls to certain levels. The current noises suggest it will leave rates much longer yet. Unfortunately, Manjo, when you're the governor of the Bank of England, you can't just quotes consider. You can't just quotes say things. Yeah, it's your job to set the tone. It's your job to be transparent. You can't just play at these things. Okay, you can't. So if you say you're considering it, that means you're going to possibly do it. So these people get paid exorbitant amounts of money to be in power. Okay, so you have to kind of stick to what you say. So you can't just say, oh, I may do this, I may do that. If it doesn't, quite suit me, I'll change my mind. The whole problem why the world's so messed up is the Fed will not give any idea of real, forward guidance. We're not saying, yes, in 6 months' time we're going to cut quantitative easing by 25, 30, 40, 50%. That's why the world's messed up, because nobody knows. And the trouble is nobody does know. These are just... Mark Carney's no smarter than anyone else, to be honest. He's just a guy. Ben Bernanke, just a guy. Obama, just a guy. I've met plenty of rich people and plenty of people in power. They're just men. They're just people. If we think these guys have got all the answers, then, we're in real trouble, because they don't, guys. They don't. So we nearly touched that level at 103.969 that I talked about in the dollar yen. We're coming back to it. So if we break this, as we've just broke it now, then maybe we'll see a quick push down to 103.726. If we just do a little kind of one of them little pin bars and the market doesn't really kind of, effectively close below it, then it might be a good buying opportunity. Because really, we've come down a long way, but it's that overextension now, isn't it? See, well, we're breaking right through it now, so I'd say definitely 103.726 will be an area of interest for the next kind of couple of hours, because if it be closed below that, the market's going to drift down. And that's a weekly and monthly point of resistance, so definitely want to look at. Okay, Joe G is just saying, won't the US tapering have any effect on strengthening the dollar? The Fed is optimistic somewhat for 2014. Well, I mean, it's a ripple effect, okay? So just because quantitative easing's taken out, that's a good thing, okay? The good thing that is quantitative easing stopped, that means the US is self-sufficient, but it's a bad thing that people are going to unwind positions of that free money. If the government's come out and said, no matter what happens, we're going to keep pumping the money into the economy until it goes, to a point where we think it can self-sustain, then you'd buy every dip. Well, I'm quite contrarian in some ways, so I like to sell some tops in the markets, but realistically, as soon as they said that quantitative easing, was going to be cut by 10 billion, which is nothing, and then that the non-farm payroll came less than expected, they've got nowhere to move. So, of course, the rest of the market is going to make higher highs. Of course they will. I mean, because it's status quo. Nothing's changed. Okay, Forex Gal, interesting. What effect on China last night's data on the US, etc.? Well, I mean, it depends how much you take in China, China into consideration. There's a lot of analysts saying that, China is going to be the biggest economy in the world very soon, and be leaders in technology. To be honest, I mean, this would be an interesting question to the group. And what do you guys think of China? I mean, I've not been to China. I know some people that have, and it's literally like, living or going to a foreign, a different planet. There's noises that are made and everybody stops and eats lunch. It's very kind of structured and ordered. A lot of busy people getting on with their lives, but it's very different to the Western way of world. So would we really consider that, that China has a place, in the world stakes? It's this big, battle between the Asian markets, massive, producers of goods, they're consuming natural resources to infuel that, that internal growth. But I mean, you've got people that have only just got cars. I mean, you've got people that are first generation car owners. You've got people that used to, 20 years ago, live in rice fields on $1 a day. I don't know. For me, it's difficult to kind of take China seriously. They're a massive threat in some respect, that there's billions of them. But the trouble for me is, that kind of, structured, ordered, do as you're told and everything will be fine. People aren't built that way. So as people get more advanced, more educated, more intelligent, more greedy, the less they want to listen to the government. So I wouldn't be surprised in 10, 15 years' time if it's not, a civil war in China and China just destroys itself. I want to live in China. I don't get told what to do by anybody, so why would I live in China? Why would I understand that? And as people get richer, more people are people are just people, okay? We're just bald monkeys. The world's been around for billions of years. We've been around for a few thousand. We're a scratch on the surface of the world's history. So as technology, as people's interests, as people's desires, people's attention spans get shorter, the quicker they're going to kind of go up that scale of wanting what everyone else has. And then the quicker the downfall will come. In the UK, remember, we used to rule the world. We used to be an empire. And now we're a tiny little island in in the North Sea. But we're still around. We're still powerful. But as long as it takes, to gain that power. I mean, look how long it took to gain it and how quick it took to lose it. It's not proportional. So it's the same in the currency markets. Okay? I agree with you, Mancho. The Americans always scupper threats to the global economy in one way or another. The final way to weaken China, they'll stop buying stuff from China. They'll just make their own stuff. I mean, Americans, the world, the European Union, we're all fairly greedy. We want our plasma tellies, and we don't want to pay more than, 700 quid for them. So while China can knock out these goods, they'll be of use. If we want to stop, China's growth, we will stop buying Chinese, imports. It's that simple. It's that simple, okay? You look at the trade balance between China and the US back in 1980. It was less than 20 million. Now it's in hundreds of billions. So if we want to stop China's progress, all we do is stop buying stuff. Goodbye China. Good night Vienna. That's all she wrote. Simple as that. So the major currencies, well, there we go. As I said, that's a nice little bounce you could have had on the, nice 10-tick bounce on the dollar versus Japanese yen. These big Fibonacci points, are always a good level to get involved in the market. So we're looking right now, dollar CAD, the dollar's certainly kind of spiked above that. I would definitely think that the CAD gets down to 10.0970 before it then goes up. Dollar Swiss down. It's only going to go down as our analysis, as I said. The dollar versus South African rand. I know you guys like your crazy currency pairs. Potentially get to 10.9928. That's big resistance. That's new highs. And then it comes down. Okay, so as simple as that. I wouldn't bother selling into it now. What I would certainly do is let it test these resistance points here, then maybe make a pin bar and then come down. So, that's definitely a quick upward spike, but I personally wouldn't be buying it. Swiss against the Japanese yen, if you want something random. Again, these things are perfect. Fibonacci is perfect. Okay, I love it. Closed below the 50%, retested it, that goes lower. Okay, so 115.04, 114.67. Yeah, these are the targets to get back. We look at these Bollinger Bands out of here. Okay, we can't sustain that for too long. So we've got a nice, I would say, 50 ticks or so to be sold off yet in the Swiss against the Japanese yen before we find some buyers. What else have we got? Aussie dollar. People love the Aussie dollar. Everybody here and here was saying, no, let's go on the dailies. It's much better on the dailies. So they're saying that, yes, obviously the Aussie has bottomed out here at this level, 0.88469. Pin by, market's getting stronger, close to the moon average. Oh yeah, we were sure by the euro dollar, the Aussie dollar, it's going to get back up here. No. As I keep saying, unfortunately, when you spot a trend, you've got to let it play out. So the trend is down. Okay, so the higher it gets, the more it's going to get smashed down. So it's still going to move lower, and once it breaks these lows, it can get down to here. Okay, so in the Aussie dollar, don't be, surprised if you don't go down another 700, 800 ticks. Okay, the Aussie dollar for me is not coming back. Okay, all the money that's pumped into Australia is like anything else. I mean, just draw some simple Yeah, some simple, trend lines. Simple as. No, that's rubbish. But anyway, monthly, again, if you look at the Fibonacci retracement from the lows to the highs, we're probably getting towards the 50%. Well, okay, there's the 50%. So until we close above or below this significantly on the monthly chart, it's still direction down. Okay, look at that on the weeklies. Yeah, market's down, 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 down. So dailies, same. Market goes down for me. Aussie dollar gets down to here into the 81, 80 region. Simple as. Okay. All right, guys. I mean, getting towards the end of the time. Is there anything else you need to look at? What's my outlook on the euro dollar? What's my outlook on the euro dollar? Euro dollar's going to get smashed. Okay, so if you've ever listened to any of my presentations, you know that I'm very negative with the European Union. That's just me. So, a bit of strength come into the euro of late. Let's put this on just to show you. Okay, look at the dailies. So the dailies. So yes, we've seen a lot of strength come into the euro against the dollar over the last few days, and a lot of data coming out, in favour of that, and that's fine. There's nothing wrong with the euro going up. In my view, it's just going to continue when it's hit resistance, come back down. So we've kind of, had this good strong channel, reached these tops, market then has broke back down. So we're seeing a lot of strength. Now I like putting the demarcator indicator and the RSI because it shows you how markets work. So right now, the market's rejected the oversold territory, is getting stronger at the 50%. So again, that's going to be a pivotal point. We're either going to then not make these highs, just like in any chart, not going to make these highs or test them and then go back down to the oversold territory. The demarcator is, again, is bull bear reversal. So I like to look at these in the hourlies because that's what makes the most sense. So really, you can see we've definitely, bought up 1, 2, 3, 4 good, solid, selling. We didn't, use your Fibonacci, low to the high. Didn't get back to the 50%, so a new high has to be made. So it has to be made. That's Fibonacci rules. You don't close below the 50%, make a new high. So we've got good targets. One spot 3661, and above that a one spot 37106. So there's still clearly bullish mentality and momentum in that. So we've got 17 ticks. We've got 63 ticks potentially on the upside. For me, again, demarker 85, RSI 78. I would say that we probably do test this level here, probably get to this mid-range. If we do get to these levels here, we're selling because we're due for a reversal on the hourly charts. Monthlies, although we've seen bullish, we're still down higher, high, lower high, lower high, lower high. So it's still, it's still coming down. Doesn't matter how you look at it. I'm not going to start selling into strength until there's a significant high been made. But yes, the euro will continue to depreciate against the dollar at some point. We're just seeing buyers go into the market for the short term. I'll be selling every significant high. Pound against the Japanese yen. Well, we're not going to do the dollar card because we've gone through that briefly. So quickly, we've got loads of people who've got time. So we've got the pound Swiss. Okay, let me just bring all these up. We'll make it work, guys. Don't worry. Pound Swiss, pound Swiss. Pound Swiss. What else have we got? Euro, pound. Pound, yen. That's probably all we've got time for. There's definitely, I would say, maybe 60, 70 ticks on the downside before we get to this daily, weekly resistance on 161. Again, you use the down here to here. Okay, so we've not retraced 50% of the down move here of these candles. We're holding below the 23.6, and the more we do that, okay, a new low has to be made. It's inevitable. Okay, so if we continue to close between 23, 38, and 50 in the next 5 to 10 hours, yeah, a new low has to be made. It's as simple as that. That's the laws of Fibonacci. So I see downside movement in the pound against the Swiss. Euro against the pound. Yes, obviously a lot of strength is coming to the euro right now. Again, I would see probably 8.2242 as a good point. This nice kind of daily resistance point to get back to. Again, a similar situation. 3-4 solid hours of buying. We will not have got back to the 50% in that. So again, we're holding on 23.6. The more we hold above the 23.6, the more likely a new high is going to be made. So I'd say that euro short term definitely is going to get higher, but I'll be selling all significant highs. I'll be waiting until 82.518, 82.695 and be selling then. I would not buy into strength. The pound against Japanese yen, well, I mean, a bit less interesting, shall we say. The market is kind of ranging. Again, we finally closed below the 50% on this formation. So if we continue to hold below that, we've already touched nearly the 161.8 retracement below that 261. So realistically, the pound has got maybe 50, maybe even 100 ticks potential on the downside. But 1, 2, 3, 4, 5 red candles. I would be careful. Maybe the market is going to test back to the 50%. Okay, but test back to this 1,729.24 before it then moves downwards. Okay, guys, that's pretty much a rundown of the currencies for 2014. Again, my views are still any significant gains in the euro I'm going to be selling. Any significant drops in the dollar I'm going to be buying. And that's as simple as, really. Okay. My views of 2014 are the world's just going to continue as normal. It's just going to carry on. Quantitative easing will be around until it's suddenly not. And as quick as it came, it literally would just be gone, and the world will have to pick up the pieces. Interest rates of the G8, UK is going to be first to move on interest rates. So if you've got pounds, keep hold of them. The pound is going to really appreciate over the next kind of couple of quarters. I'm certain of that. And interest rates will be the first to move in the UK. So pay off your credit cards, pay off your mortgage if you can, because interest rates are on the way up. Simple as that. Okay, guys. Well, a pleasure. A pleasure as always. Thanks to Vicky Maud and all the guys at FX Street. Anything else you want to know, follow me on Twitter at Steve Ruffley. Any questions, steveruffley@tradermaker.com, sruffley@tradermaker.com. Send me an email. I'm always happy to reply to an email. Been an absolute pleasure, guys, and thanks for that. I'll see you all very soon. Okay, good afternoon.